Hello, today is Tuesday, the 18th of December, 2007. This is Brian Shannon from Alpha Trends Blog Spot, and the market's closed. Looks like the market's trying to stabilize a little bit here after the recent large sell-off it's seen. And like I've been saying, there's really nothing bullish looking on this chart, especially on this time frame. When you start to look at some of the shorter-term time frames, though, you will start to see that that battle is starting to be fought maybe for control a little bit in here. We see first that the shorter-term moving averages are crossing here. We do have this little level that we have, the market gapped up today. Then the sellers came in once again, as they have on pretty much almost every opening gap lately. But then the buyers were able to regain control here. So that's the first time that's happened in a while. So the sellers were unable to maintain that control. And when you look at a 1 minute time frame, you can see I had posted on my blog a picture of the chart of the Qs right about here at that time, saying that it looked like the buyers have regained control for the day, and at that point they had, as the market again probed the downside with these nice series of just classic lower highs and lower lows, and then it started to make these higher lows right in here, and then a higher high. And once the market leapt back up above this daily VWAP, the buyers were clearly showing that they had control for the day. And when you come to look at a larger term picture, we've still got this declining 5-day moving average, and on the daily time frame, again, I consider the trend to be lower when we have a declining 50-day moving average. I was answering an email from someone today saying, we still have, though, these we haven't seen a lower low in quite a few months here, and that's on the monthly time frame. What you've got to remember always is there's a lot of different trends on the market, and with no reference to time, trend is very ambiguous. You have to look at it and define on what time frame are you looking at. On this time frame, we're starting to see signs. This is the 10-minute time frame. We're starting to see signs that the battle for control is being fought a little bit harder in here, that the sellers might be running out of inventory, shorts are starting to cover a little bit, and maybe a little bit of sidelines cash is coming in. But with this declining 5-day moving average, you still want to be suspicious of any rally in here. Now, what I was starting to point out also today, later in the afternoon on the blog, was that potentially we're starting to see inverted head and shoulders patterns develop on these shorter term time frames. So I think for the SPY, probably, to get a little bit more confidence in this market, you want to see it get back above here. Then you've got this gap, and you've got this level up here. So there's the potential still for a lot of overhead resistance, and the larger head and shoulders pattern that I outlined earlier in the week is still in effect. So there's still just a lot of mixed pictures from various time frames in here. You can look at this and say it's just a mess. We did see this pattern of lower highs violated, but with that declining 5-day moving average, it means remain suspicious, especially when we've got this longer term 50-day moving average declining in here. Bullishly, you can point to a little bit heavier volume today, as the market did gain 0.5%. It's got a red candle because the close was lower than the open. However, today's close was 77 cents above yesterday's close, so that's why it's a bullish event, day for the market, and that's again further confirmed here on the 1 minute time frame. So very mixed picture here. Like I suggested on the blog today, late afternoon, that if you're going to attempt to trade the upside here, there's still a tremendous amount of risk that move will fail. So if you've covered your shorts and you're looking for a bounce in here, I think that the best way to do it, particularly on expiration week when the premiums aren't quite as high, you don't have all that time value built in, is to purchase call options. That way you're absolutely defined in what your risk is. But we've got some catalysts coming this week from more earnings. We saw Goldman Sachs today. Apparently they were saying that the numbers were good, but the market didn't care, and that's what's most important, is that it's the reaction to the number, not what Jim Cramer or any other analyst or anyone says, but what did the stock actually do. It broke a series of broke these higher lows right in here a couple days ago. We've got a declining 50-day moving average in Goldman Sachs, and it sold off on heavy volume. Doesn't mean it can't turn around, but when you see a large event, and later, I think, Thursday after the close, Actually, yeah, after the close, Research in Motion is going to report, and this stock is in a real precarious position here at the $100 level. It's been showing these lower highs, but a level of support. The more times that support is tested, the more likely it is to fail, particularly when you see the 50-day moving average declining. And where could it drop to? You know, longer term, it's still in an uptrend. Look at this 40-week moving average. Maybe it comes down to test that, though. It's a tough call. It's a gamble on earnings. If it, excuse me, if you're going to gamble on earnings, do it with options. That way you at least know what your risk is, and you're not going to lose everything if you're wrong. But I wouldn't suggest it anyways. The semiconductors had a little bit of recovery, I guess, up 0.25%. Hardly registers. But if you look at the downtrend in here, it's been a severe angle to this downtrend. And we did see that the market made this higher high, but again, look, the descent of this 5-day moving average. If it does bounce, I would expect that. Keep an eye on that 5-day moving average intraday, that it will probably find resistance near that on an intraday basis. As far as the IWM goes, this came down close to the important level that we've been looking at, that a lot of people have been looking at, 73, 73 and a half. It came down to about, I guess, 73.30 or so today, but it did manage to bounce higher. And this one actually showed a green candle with that heavier volume. So it looks like the scenario that I outlined yesterday is starting to maybe take course. That is that the next test of the support level wouldn't necessarily break, but it would further weaken the buyer's resolve in there, that we may get a rally up towards about 76, 77, and then a failure. So let's just keep our eye on this leg of the move first, but keep in mind it comes with an overall downtrend on the based on the 50 and the 200-day moving average, and that this level of support, the more time support is tested, the more likely it is to fail, as the buyers just lose their conviction and then sellers get more aggressive and realize that there's no reason to be involved on the long side, and then they start to just give up. Short sellers come in and get real aggressive, and you could see a real catastrophic failure here if it comes back down to that level. For now, though, on a 10-minute time frame, it's bouncing a little bit, but even there, you can't have too much conviction or belief that it's going to turn into anything more than a couple days rally, because we've got this declining 5-day moving average. So don't get excited because the IWM was up 2% today. It's still showing a lot of danger, and breaking below here, this what puts the long-term trend in a downtrend. We've had on the daily time frame, clearly we're in a downtrend here. But again, I think that just based on the direction of that 200-day moving average, that means that the biggest money in the market, the institutions, the pension funds, the big mutual funds, are net sellers of these stocks. That's the only way you can get a 200-day moving average to turn lower, is to have an average close declining over the last 200 days. That means that prices are declining. That, in my definition, on the weekly time frame, the 40-week moving average declining means bear market. Whether or not we have a low to further confirm that, I think it's just inevitable that that will occur. So really remain on continued high alert here for this market. It's a trading market. Today I thought that maybe, intraday I said looks like maybe we're going to get a test of that 200-day moving average here soon at 48 and a quarter. Then I pointed to the 1-minute chart here today at about this point and said that it looks like the buyers have regained control for today, and we're going to have to hold off a test of that 200-day moving average. It came down, it's pretty much closed neutral as far as who had control. It was up 0.33%, but again, it's just a negative-looking market, potentially bouncing a little bit in here. I had outlined this potential for an inverted head and shoulders. Breaking above maybe this 50 and a quarter level could lead to a rally of about $1 up near 51 and a quarter or so, and that's where you would expect to encounter some resistance from this prior level of support. We continue to see trend being mixed on a lot of different time frames, and you've got to just remain very careful. By the way, Capstone had a great day today too. Keep your eye on this one. Maybe a little bit of a pullback in towards about $1.50, 52 tomorrow, but this one continues to act real strong. It's got this dynamite looking weekly chart, and the other low price stock I'd mentioned actually had a fairly decent day today after a little bit of a shakeout that shouldn't have stopped you out.